All right, so today is April 18th, 2020. I'm here with the wonderful Robbie Greene. How you doing, Robbie?
Good. How are you?
Cool. All right, well, so I'm looking forward to talking to you about these topics. We've been talking about these for a long time, just back and forth at the dinner table, at wherever. Um, so really, I'm really looking forward to kind of just gonna going through them with you, especially when everything that's happened the last 2 months, I guess. But you want to start with just kind of an introduction of who you are and what you've been up to and all that?
Sure. Yeah. So I have, currently I'm not in China, but have been living in China since the summer of 2018. I'm a visiting researcher at a research organization at Tsinghua University, based in Beijing. And then I'm
Mhm.
also a senior fellow at the program on international financial systems, which is affiliated with Harvard University. And then also a fellow at Singapore University of Social Sciences, and that's kind of how part of the way we know each other. Um,
Yeah.
and Before moving to that part of the world, I was a Washington D.C. based financial services consultant, and then before that worked in think tanks and briefly in government as well, working on
Yeah.
financial services issues.
Pretty dope stuff, man. So you've been doing a lot of research in your professional career, and if I recall correctly, a lot of that research is about financial infrastructure, right?
Yeah, yeah. So when I was a consultant, I did work related to financial market infrastructure, and as a researcher, I've also focused a lot on how new technologies like distributed ledger technology and blockchain can have an impact on settlement and clearing systems, and then also payment systems as well, and also how these technologies can impact the ability of firms to raise capital. So whether that be through you know, token offerings, which are sometimes called ICOs,
Mhm.
or whether this be through uh, what some people call security token offerings, or whether this blockchain be applied in a way that impacts how stock markets record ownership of securities or facilitate payments.
Mhm. Gotcha. Yeah. So there's something I really want to kind of ask you about because it's something that I know you've been doing a lot of research into, and is with the kind of unprecedented stimulus that's coming out these days, with the fact that everyone's at home, and that's CBDCs, right? Central bank digital currencies. So, how would you define a CBDC? Is to me, it's just like if the central bank issues a currency and it's like if the central bank, I don't know, like how would you define a CBDC?
Well, I think that's a great question, and to my cop out answer is I don't have one. I think it's a very it's a term that's being thrown around a lot, and people really haven't thought through a definition for it, right? So I'm gonna dodge that one and say the onus isn't on me to create a definition for CBDC. It's presumably on central banks. I
Yeah.
think one of the fascinating things that you're seeing right now is a huge divergence within countries and outside and between countries as to what will central bank digital currency look like? What's the purpose of central bank digital currency? Is the purpose
Mhm.
of central bank digital currency to improve financial inclusion for low income individuals?
Mhm.
Or is the purpose of central bank digital currency to facilitate more efficient bank to bank transfers? Both of
Mhm.
those policy goals are fantastic. I mean, it would certainly to have safer, more efficient interbank transfers is a great thing, and to have more financial inclusion for low income people is a great thing. But the way in which you reach those ends is very different, and I think that is uh, something that needs to be resolved, and it'll fundamentally impact what a central bank digital currency looks like.
Yeah, it's yeah, like you noted, there's a lot of ambiguity in what a CBDC is. And it really reminds me a lot about so I don't know if I told you this before, but I used to work in AI before I did blockchain stuff for a few years. And so there was like people trying to come up with definitions for AI, and there's never really been like one single definition. And my favorite definition has always been that AI is whatever you see computers doing in movies. That's what AI is. That's like what we wish computers could do for us is what AI is. And I feel like CBDCs, like you said, it's like we're not, there's a lot of ambiguity as to what exactly they are. But the goals are generally quite beneficial, or at least the stated goals. It just reminds me a lot of AI, where it's like, the central banks are going to do something, and it might be on a blockchain, or some DLT-ish data structure, and it's going to presumably create a lot of good, but we don't exactly know what it's going to look like or how it's going to work. And like you were kind of mentioning, we don't even know exactly what the point of issuing a CBDC is.
Yeah, I mean,
Yeah.
I think one thing that the one kind of common point on CBDC, and even this isn't fully, I mean, when you start to hear people sometimes talk about a digital dollar, then this isn't necessarily how it would work. But one of the, I mean, if you look at some of the stuff that the BIS, the Bank for International Settlements, and other international Financial Stability Board, and if you look at what they've put out on CBDCs, so these organizations that are multilateral entities where regulators from numerous countries they come to talk about these topics. The general consensus, right, is that this will be a new form of central bank liability, right? So, central banks have cash. When you hold a banknote, that's a liability of the central bank. Central banks have reserves in the sense that, large commercial banks are depositing funds at the central bank, and those are reserves. So that's a liability on the banks, on the central bank's balance sheet. And the idea of CBDC is presumably it's a new liability.
Right.
So that is, I think, one. I would, when just going back to your original question, I would add that one element, but still, there's a lot of ways to do that, right? And so, kind of that doesn't necessarily define CBDC. It's just explaining one characteristic of what a CBDC would have.
Yeah. Yeah, exactly. It's got something to do with the central bank, and the rest is kind of open to interpretation. But a lot of people, I think, well, certainly now that the stimulus checks are coming in the U.S., I think it's kind of like, well, if we all just had an account in the Fed, then it'd be so much easier, right? They would just, they would just put in a few buttons and it would just show up in their account. Um, Maybe if that's how it's actually going to work. But I think a lot of people have been talking about CBDCs the last month or so, specifically because I think people kind of want hope, right? This kind of crazy time. They want to see that, once we're out of this pandemic, things are going to be different and better. And, money is just going to work better. And so what do you think, if that's kind of what the CBDC is just going to be, if it's just kind of new liability held in the central bank, what do you think the benefit, what do you think the point is? What do you, not just in terms of, well, for financial inclusion, to help certain underprivileged people, but what's the point for the central banks? What's the point for these nation states to want to push these out?
Well, I think a lot of the rhetoric certainly in the U.S. with regards to central bank digital currencies at the actual Federal Reserve has been pretty restrained, pretty conservative, not in the political sense of the word, but in the sense of recognizing that introducing a new liability to the central bank balance sheet and introducing a new way in which the Fed could, or a central bank could, presumably conduct monetary policy. It's a big deal, and it's not a decision to be taken lightly. And so I think there's a lot of calls for CBDC, well, at least in the U.S., outside of the central bank. But I think the central bank, I mean, they recognize that this is important and a very important discussion to have. But there's a lot of risks and benefits to be, thought through. Then you can go to Europe, and in Europe you have, so for example, last week or the week before, you had France's central bank issue a request for proposals, wanting to experiment with a bank-to-bank CBDC, right? So they want to. France is very interested in looking. This proposal has nothing to do really with the average person, but more so is about how can we improve bank-to-bank euro transactions. And then in China, you've had the news recently of some pictures emerging of what would be the CBDC wallet, presumably. It's branded with a state-owned bank's logo. And there's now reports that certain state employees in one city's district are going to experiment with receiving CBDC as a transportation subsidy. So, I mean, when you contrast what's happening in China to what's happening in Europe to what's happening in the U.S., and I could go on and on, but I think that the broader point here is that as we look at what the pandemic, how that's influencing calls for more CBDC, I mean, calls to look into CBDC more and calls to push out CBDC. I think central bankers are still, they have their hands full.
Yeah.
And I think not all not all of the discussion about CBDC is in direct response to the pandemic. I'll also just note on that front that there's ways to get money in the hands of people quickly without CBDC, right? And as an example, going back to China, there these recent experiments of CBDC have nothing to do with really getting the cash into the hands of people in response to the pandemic. I mean, maybe that could happen, but as of now, that doesn't seem to be the case. What is happening, though, is local governments are partnering with Alipay and using Alipay to issue vouchers. Vouchers for restaurants, vouchers for movie theaters, vouchers for local businesses, gyms, in a way of trying to get people spending in the local economy again. So I think kind of going then back to the public calls for CBDC, or what you mentioned, this kind of people wanting hope. I think what this whole incident, the current state, I think we can all agree that the payment system needs work, right? Payment system in the U.S. needs work. The payment system in Europe needs work. Payment systems, like anything, any infrastructure can be improved. And I think when we wonder, hey, why does it take so long for a check to reach someone? Is there a better way of doing this? And yeah. And then the question is, do you need to solve that problem with CBDC or not? And I think that is certainly up for debate.
Yeah. Yeah. I mean, so let's actually unpack the alleged China example, right, where they're using wallets to send kind of travel vouchers. Because when ACHs came out, no one used them, and then they started distributing Social Security with it, and then everyone started using them. Now ACHs are kind of the dominant form payment, domestic payment in the U.S. And so when you said that, it's reminded me so much of that example, where it's like if you start sending around, travel vouchers or other vouchers, then yeah, everyone's gonna register for one of these immediately. And it's such a kind of self-contained use case, especially because it's public transport. So, um, it was kind of within a state-controlled system anyway. And so, it's like perfectly reasonable, right? Like, if you wanted to issue a travel voucher on Alipay, you could, but then you'd have to go to this private corporation and ask them to make a new kind of credit inside their database. And then you have to work with the transportation system to kind of integrate with Alipay. And you might as well just cut out the middleman, just do it yourself, especially considering these are both state-provided services. So maybe that's like enough benefit is just a way to kind of distribute central bank stimulus. Because another major issue in the US is that, the central bank the Fed is putting out all this lending, all this liquidity for small businesses. At the same time, all these commercial banks are terrified of lending to anything that's not Fed backed because obviously the credit risk is so high right now for everyone. And so there's this issue of like there's all this liquidity, but it's kind of not being able to the Fed can't get it out to small businesses, fast enough because it has to be filtered through those financial intermediaries. So maybe this would be a case where a CBDC just makes more sense. Um, I don't know. I mean, and then there's the fact that if it really just is a way to replace cash, cash, as you know, is like the most popular way to launder money. And so if you just have cash that is overseen directly by the central bank, it might make it a lot easier to fight money laundering. Um, I don't know. Do you think these are what people are going to be going for when they put out these CBDCs?
Well, I think I think it's really I think it really depends on the jurisdiction, right? I
Mhm.
mean, I think countries, like the U.S., like Germany, like Japan,
Mhm.
there's an affinity for cash, right? And I mean, and even with the proliferation of credit cards and with the proliferation of technology that would allow for you know next generation and ways of paying. So, for example, Google
Mhm.
Pay. I mean, you can use Google Pay in the U.S., but granted, not every store accepts it. But I mean, it is a technology. Yet, plenty of people choose not to, and I think that when policymakers are looking at when and where to deploy CBDC. Again, so let's just, I guess right now we're confining the discussion to retail facing CBDC that everyday normal people would use, not the
Mhm.
bank to bank CBDC, which is a big part of the discussion. But putting it just
Mhm.
on retail CBDC, yeah, I mean, what you touched on, the anonymity concern is a huge one. Uh, and that's a double edged sword, right? Because on one hand, if you don't allow that anonymity, well then, and it's a new way in which the state to have more insight into your payments behavior. That's a
Mhm.
disincentive to use, presumably. Um, but if you don't, if you do have rigorous anonymity protections, then essentially the state is facilitating. It's no different than cash in that way.
Mhm.
And yes, illicit transactions occur in cash. But I will add that I mean, illicit transactions occur via cash. Illicit transactions also occur via banks. So
Right.
this is criminals will do criminal things.
Mhm.
Um, so when again, I think the biggest fundamental question for retail facing CBDC is, I mean, one, you're kind of building out a new product, right? So you need to
Mhm.
incentivize users, and I think that is fundamentally the biggest question. Like, why would someone choose to use CBDC versus another payment mechanism? If I use my credit card in the U.S., I get points, and I can then use those
Mhm.
points. So that's an incentive for me to use that credit card relative to cash. In
Mhm.
China, if I use Alipay to buy delivery food, well, then I can get a discount on the delivery
Mhm.
food. That's an incentive to use that payments platform. Um,
Mhm.
and then I can also, you get a score, and then that score can help you use other services. But what is the incentive for CBDC, right? I mean, and especially, let's say we evolve to a system where different accounts and different so let's say your checking account is very easily able to switch into CBDC, right? So you have an interest
Mhm.
bearing checking or savings account, and then you also have a CBDC wallet. And let's presume that the CBDC does not give you interest. Why would you keep your money in CBDC
Right.
if you can easily switch it? Even if you want to use CBDC to pay, even if there's an incentive for you to use CBDC to pay, why would you
Mhm.
store your money in CBDC if you can store it in an interest bearing account? So I think these are some of the So even if you build up this super awesome payment system that is a CBDC payment system, unless you can incentivize people to use it, then that's going to pose an issue. Then the converse of that is, okay, maybe you incentivize the shopkeepers and the merchants to, it's a public good, and so you have this low cost payment system that is an alternative to these third party payment providers. But that also creates, is that something that you want your central bank doing, right? And I mean, I could go on and on, but I mean, I do, when it comes to retail CBDC, I do feel that unless there is an active push, it's going to be getting that user uptake is going to be difficult.
Yeah, is that, I think it's a great question. Is that something you want the central bank to be doing? Because, I think the last month really, we've seen kind of just a staggering growth in the role of government in everyone's lives. Certainly in the economy, certainly in public safety and public health. We have these massive restrictions on travel, on what you can do. We've seen Facebook since Trump got elected, right? People have been calling on Facebook to do more about news on their platform. And now they just started. It took a global pandemic for them to release a fake news tool. Twitter has stepped up their fake news policing as well. And so all these things have happened. And I think what we're seeing is that it's really that, government, that central banks have really stepped up their presence in people's lives. They're playing a much bigger part in everything now. And, I don't know if that's a good thing or a bad thing. I think it's still way too early to tell. Obviously, in the short term, I think the intention is to kind of to save the economy and to reduce the pain that everyone's feeling. And obviously, I think that's great. But, to your point, is that like, let's say that after a year, this virus fizzles out and we start going back to normal, whatever that means, then is that kind of what we want? Do we want the central banks to be kind of have a much bigger role the in the economy and the financial system? And what do you think the impact from that is going to be?
Yeah, so I think it's important to look at it again, country by country, right? I think putting all the massive monetary policy decisions of the last few weeks that have been made and how those will certainly lead to years and years of consequences and decisions that need to be made. Going back to just the payment system, I think just given all that I think that there presumably will be at least some level of folks not wanting to use cash as much in payments because of a feeling of this can be a way in which germs can be transferred, even though there's conflicting studies on that. And I'm certainly not a doctor or so I don't know if that is how what the I just know that there's conflicting studies. But I think that feeling, so certainly that's going to maybe push people more into using digital payments. But I think and I think there's also a certain level of, as we see these flurry of announcements and trying to talk about CBDC, and Libra puts out a new white paper and all these announcements come about, there's a certain it's kind of becomes a bit of a competition. But in terms of like a full-fledged rollout of CBDC, like a nationwide, this is what's being used. I mean, for the big currencies, for like the U.S. dollar, for example, I remain pretty skeptical that you're going to see a massive rollout of a CBDC defined as a central bank, liability in the near term. I think China will presumably, pilot a form of CBDC in a city or two or three on a larger scale than what's set to occur in the month or two ahead. Probably by Q4, there will be a more robust pilot. But even there, it's a very that system, at least how it's been described, is a two-tier CBDC in which the retail user is going to kind of store their CBDC with a state-owned bank-sponsored wallet or a bank-sponsored wallet, and then so then I guess that will still represent a new form of a liability on the central bank's balance sheet, maybe. But then I guess that's much different. And this, again, is just, it's not like I have some inside baseball knowledge. I'm just, looking what the official announcements are. And that two-tiered CBDC model is very different than what, for example, some of the Democrats on the House Financial Services Committee have endorsed here in the U.S., which is having a form of a digital dollar that is basically a consumer bank account at the Federal Reserve. That very different, very, very, very different. And yeah, I mean, with both of those models, well, let's go back to the China example. I mean, there's still this question of why use CBDC? Is there going to be interest on it? If not, then what's the incentive to use? Why not just keep my money in my state-owned bank account and then only switch out to CBDC when I, need to pay? And so this goes down to this question: will retail-facing CBDC be a payment system, or will it be a store of value? Why do people have cash, right? Do people have cash mostly to pay, but some people also have cash they want to store money. And indeed, when crises occur, there's sometimes a rush to cash because people perceive that as safer than the money in the bank. And so I think these are all really important questions that need to be addressed. And I'm not saying I don't think it's possible that CBDC will occur in my lifetime. I just think in the very near term, especially with everything that's going on, there's some serious logistical issues that need to be thought through, and they need to be thought through very carefully. And I should say policymakers are doing that, and so that'll just take time.
Yeah. Well, let me throw kind of a speculative fiction kind of example at you. So let's say that the CBDC model it's a consumer bank account at the Fed. So let's just start with the U.S. All 350 million people have a bank account at the Fed, and it's a dollar, so it's 1-to-1 with the dollar. It is actually a dollar, right? It's literally a dollar, and all payments information is kept at the Fed. Obviously, everyone's KYC'd, and there's no interest. And you receive your by now ubiquitous universal basic income payments through the Fed. You just put in a few numbers and you just get your money. And every nation in the world has this. And let's just say that's a scenario, right? And there's no restrictions about things like Alipay or Stripe or whatever. You can still order at Square. You can do whatever you want. It's just that everyone just has tons of CBDCs, CBDC coins, because they keep getting them through the UBI programs that, in this scenario, every government now has. What does the world look like at that point? Everyone is a consumer, everyone's a client of the Fed, and everyone's also kind of like, they're being kept alive. They're being fed by the Fed, right? They're getting money from the Fed. What does that look like?
Yeah, well, so I think that, a number of points. First of all so even in a world of UBI, and even in a world where UBI is done via CBDC, I think the fundamental question remains: is that CBDC interest bearing or not? And if it's not interest bearing, and people still have the option for bank accounts, well, then I guess my question is, why aren't you going to put convert your CBDC into a deposit at a bank account that yields interest, or maybe interest interest rates are zero or negative, but still, I mean, there's all different. I guess I am skeptical that without interest-bearing CBDC and an option for interest-bearing deposit accounts, that one would leave their money in CBDC. On top
Mhm.
of that, I think before we even get to this scenario, let's imagine a world, okay, where it is interest-bearing, or that interest rates are so low at checking accounts that people don't care, or just the way deposits are historically sticky, and so maybe people think they're Fed, treat their CBDC coins at the Fed as a just another deposit, and they don't want to worry about it. They feel they appreciate that safety. Well, then, I mean,
Mhm.
I think, and this is a big consideration of CBDC, is, well, then what is the effect on the banking system, right? Because
Yeah.
deposited banks fund
Mhm.
loans, right? And so I'm of the view that once you start looking at CBDC as a store of value, that can get very that could ultimately be a huge shock to the financial system,
Mhm.
because you know for quite some time, banks have existed to engage in taking in deposits and converting those short-term liabilities into long-term assets, loans, right?
Mhm.
And you know, this business model has given rise to deposit insurance. And so again, if we're talking about people want safety, well, I mean, there's a lot of debates to be had about what's the appropriate way to structure a deposit insurance system. But at least the status quo right now in the US and in most countries is that up to a certain level, right, your money in the bank is insured by the government.
Mhm.
And and so then functionally, if you're concerned about the security of your money, and let's say the government's giving you a UBI, you can either have a government-backed yielding product, your checking account, or a government-backed non-yielding product, your money at the CBDC account. And so there, again, unless that interest rate is higher, or unless we're assuming that the margin's so small and deposits are so sticky it won't matter, then I think the money will flow to the deposit checking account. And if that's not the case, and if the interest rates on the CBDC are sufficiently high, and it's going to cause people to flow in mass to CBDC, well, then that's going to be a huge hit on the banking system, because then
Mhm.
there's not deposits to fund loans.
Well, now that you're because we've talked about this a lot of before, but it's like, why does a commercial bank need to exist in like such a Fed dominant world? But like, now that you're talking about it, I feel like there is a scenario where all these can kind of be maybe solved, where because I feel like if the Fed went to such a length to kind of put out the CBDC, so I feel like they would have to include some kind of API to kind of mess around. Obviously they'll let certain authorized parties mess around with the money in everyone's CBDC bank account. And so consider this. So let's say there exists an API, and from a consumer standpoint, it's like, you know, some third party, let's say JPMC, they want to use your money, and you click a button, and then a pop-up comes up like a Facebook login. It's like, hey, JPMC is going to use your money to um, to make loans to people, and your money's at risk, but they're going to pay you this much interest. Let's say it's like a 10% loan. They're going to pay you like 7% interest, like a non-trivial amount of interest. Do you want to move your money to a sub account at JPMC's CBDC account? Do you think that would be a plausible kind of solution to this problem of like a shock to the bank system plus not having interest on these CBDCs?
You know, I, I guess then that goes into it's this other barrier, right? Which is at some point someone has to flip on the switch,
Hmm.
and you know, we're talking, I mean, about a pretty high stakes game, and
Yeah.
I guess I don't see how this any iteration of CBDC gets rolled out without lots and lots of pilots and lots of testing. And then ultimately, once you get commercial banks involved, that poses a whole new set of challenges, because what commercial banks are you going to get involved? Are you going to get all of them involved? Well, in countries like the US and Germany and China, there are a lot of banks. We have lots of
Hmm.
banks, particularly in the US.
Hmm.
And so are you going to set up a CBDC system that, creates that allows the largest several banks to have this relationship that the other banks don't have? What impact is that, and then you think about the percentage of small business lending and agricultural lending in the US that's done by community banks, and that's about 50%, 70% respectively, right? And
Hmm.
so you if you do anything to kind of, any action is going to have a reaction, and I get, so that's why I think the Federal Reserve in the U.S., their cautious approach is commendable, I think, because there needs to be a strong consideration of what this ultimately will mean for the banking system. Because any disruption to where deposits are stored fundamentally is going to disrupt how credit is allocated across the economy. And then you're starting to talk about, especially now, that is we don't want to have a 1-2 punch, and we want to be very careful with any potential disruptions to how credit is allocated.
Hmm.
I think then going back to then there's this question, okay, well then how can we maybe use distributed ledger technology to improve bank-to-bank payments, right? Because maybe,
Hmm.
and this kind of I think goes to what you're talking about, is there a way that there could be we'll call it CBDC, but a blockchain or distributed ledger technology, or even just a better way of facilitating bank-to-bank transfers
Hmm.
initiated by consumers? And that's there are efforts underway in the U.S. to do that, and I think that those efforts could be accelerated, and I think they're incredibly important. And I think that's the big question is what, can commercial banks be, have the leeway and be able to create this more efficient payment system that enable end users to transfer value in a safe, secure way,
Hmm. Yeah.
in a fast,
Yeah.
safe,
So
secure way, I
actually,
should say. Yeah.
yeah. Well, let's talk about that. So it's like, so there is a medium out there which shares half of the objectives that these CBDCs are trying to accomplish. And I think you know what I'm talking about, where
Yeah.
it's on a blockchain and it's private and it's secure. It's an order of magnitude faster than Swift, and et cetera, et cetera. But it absolutely defies intervention from central banks, and it's got no AML checks kind of baked into the system, and it's not even the currency is terribly volatile and it's not pegged to anything. And some would say it has no inherent value, and obviously it's been working for 10 years. And obviously that's Bitcoin. So, what do you think a role Bitcoin kind of plays in a world where everyone's just running around using CBDCs?
Yeah. Well, considering that, I would say my view is that a world in which everyone is using CBDCs is very far off. The question is, what is Bitcoin, what is Bitcoin's functionality in the payments in the global payment space 5-10 years from now? And I guess my view on that is Bitcoin has proven itself as an ability to conduct cross-border uh, cross-border payments, quite effectively. I mean, surely it's not perfect. Surely it has problems, but I mean, the UI could
It
be better.
works.
Yeah, yeah. I
Yeah.
mean, people aren't necessarily using it in the most secure way. There's sloppy mistakes, and there's hacks at exchanges, and there's hacks at intermediaries. Uh, so it certainly has problems. But in terms of getting the underlying technology, in terms of getting money, or we'll call it value, from point A to point B, point A being in one country, country X, point B being in another country, country Y, it does that. I don't think anyone can debate that. It does that. And if you're using it in a safe, secure, correct way, it's going to do that quite effectively. I can't. I think the more technologist-oriented debates about what effect halving will have on this, and what effect, will a competitor to Bitcoin emerge that's better? What does that mean? That those are important debates, and I always like to read up on that. But I
Mhm.
think the fundamental the question of, does this work? The answer is yes. And will
Mhm.
it increase in usership? I think it's safe to say yeah.
Mhm.
And what does that mean? I think, well, there's already companies and actors that are working to be able to kind of engage in making sure that criminals who use Bitcoins for bad purposes, you know, are able to be caught. So
Mhm.
that technology is increasingly, being developed and used, but ultimately there is a degree of anonymity associated with those cross-border transactions that is, a step below cash, but certainly a step above a transaction that involves two banks.
Mhm. Yeah. Yeah. Do you have more time? Because I got one last thing that one more controversial thing I want to ask you about.
Sure, one
In
more
regards,
controversial question.
one more controversial question. Because I think, a lot of time when we talk about CBDCs versus Bitcoin, we talk about stuff like anonymity and privacy and AML and stuff like that. But, again, given the new world that we live in, it's the Fed's balance sheet has increased dramatically recently, and it doesn't really show any sign of decreasing. I mean, certainly with 2008, we said we'd increase it, then we wind it down. We tapered for like a year, then we just dumped that, just threw that out the window. And so, in a world where where the money supply of fiat currencies, of central bank currencies is increasing dramatically. You know, the one of the advantages of Bitcoin is that the issuance is certainly increasing a lot slower than the Fed's balance sheet is. Let's just say that. So, do you think that having a competitor, not just in terms of, here's this other system that works, this technological system that works, but like here's this other form of value that is based on completely different principles from kind of central bank paradigms. You know, what do you think the impact of that is going to be?
So basically, what will be the impact of having this alternative payment system exist in a world in which we're experiencing very new forms of monetary policy?
Well, more like what is the alternative, alternative store of value? Where our current stores of value are, well, there's a big experiment being put on with them.
Yeah, I mean, I mean, that's where, it's been interesting to see what's been happening in the last few weeks. We're recording this mid-April, 2020, with regards to, Bitcoin not necessarily behaving. I mean, stock market goes up, Bitcoin goes up. Stock market goes down, Bitcoin goes down.
Mhm.
Um, so there, some have said that's because of increased institutional investor participation in the market.
Mhm.
Um, so I guess, this question versus your last question, right? When the last question focused on Bitcoin as a payment system. This
Mhm.
question, I guess, is more geared towards Bitcoin as a store of value. Uh, that is, I think, is going to be a fast. I don't presume to know the outcome on that,
Mhm.
and I, in part because I focus more on kind of the, how financial market infrastructure operates.
Mhm.
And I guess all I can say is that, you know will people, when they are transacting via Bitcoin, will they want to keep their money in Bitcoin, right? I think that's the question. Will they want to keep will people want to continue storing value? um, I think this ties into a broader debate of, do we think trends, I mean, do we think there's going to be an increase in dollarization, or do we think
Mhm.
we're headed towards a multipolar currency system, right? And again, I mean, I don't know, I can't presume to know what the outcome is going to be, I mean, certainly
Mhm.
it seems right now that the trend is towards increased dollarization, and certainly, you know, the advent of a digital dollar that can be used overseas would accelerate that trend. Um,
Mhm.
so, you know, certainly, I guess in a world in which you have a bad case scenario in 2-3 years, I think that increases the people's desire to store value in Bitcoin, particularly if you start to see more and more attempts to implement capital controls
Mhm.
around various jurisdictions in the world. And that could happen given the particularly in emerging markets. But you know, I try not to engage too much in the in
The speculative fiction side.
yeah, or just like knowing what the price. I don't know what the price of Bitcoin will be in 2-3 years. I do
Mhm.
think that its usership as a payment system will increase, um,
Mhm.
but I don't think that that's the only driver of its price.
Yeah. Yeah, fair enough. Fair enough. Yeah, well, let's just say it's a brave new world that we're entering into.
Indeed.
Cool. All right, Robbie. Well, thanks so much for taking the time. This is fun.
Yeah, thank you. Yeah,
Next
hopefully see you in person soon. So,
time. Hopefully, yeah, sometime this year. All right, man.
yes.
I'll
All
talk to you later then.
right. Take care. Bye.